Good evening, traders. It is Sunday, April 12th, Easter Sunday. I was doing a little bit of research, wanted to see how the overseas markets were doing. Looks like the S&P futures are going to be down about 20 points. Ran across a stock, very easy to find. I'm going to highlight it. This is going to be a short video. Maybe it'll last about 7 or 8 minutes. Quick market recap. We had a really nice cup and handle formation here. 262 on SPY, 262.50 to be exact, is the level that we want to see the S&P 500 trade above. Now, we're having a little bit of a rally into earnings season. The worst of the coronavirus news is behind us. It has to be contained. We've got to get this economy back on track. Every week that we linger into May with this shutdown, the economic recovery becomes exponentially more difficult. Every single week that we stay in this lockdown, small businesses are going to have a harder and harder time recovering. So keep that in mind. I'm still looking at some type of rollout in the first week or two of May where businesses start gradually bringing their employees back. So until then, we've got this nice cup and handle formation. We've got support at SPY 262.50, and you can see that we have a higher low. I am expecting future volatility. I do believe that there are going to be some economic aftershocks and some pullbacks, but I also believe that we will see a series of higher lows. But this bottoming process is going to take months. So we still need to distance ourselves from the action. We are going to sell a bullish put spread, and I'm going to show you that in a couple of minutes here. It's very easy to find. So we still want to distance ourselves from the action. We still believe that the market's going to have some aftershocks. Not all of the news is going to be good. So we can sell that out of the money premium and take advantage of time decay. Stock selection is critical. Balance sheets are critical. We also have to tippy toe around earnings season because it's going to start this week with the major banks. So we want to make sure that any bullish put spreads that we sell are actually expiring before that earnings announcement. So let's go into custom search very quickly. We'll click that and we'll pop that window up. And we're going to go in and we're going to take a look for option liquidity, 3 or better. And we're going to go in and we're going to look for a stock that has a trade signal on a 4-hour basis and on a daily basis. This is the one option buy signal. And we're also going to mark strength versus the S&P 500. And then we'll click scan and we'll see what we come up with. And we've got lots of candidates to choose from. If we want to start tightening the constraints, we can start adding more and more criteria. The more criteria that we add, the more stringent and rigorous the testing is for these searches. So eventually, you'll end up with maybe a handful of 5 to 10 different stocks that you can very quickly click through and get your results. Now, I happen to go through and take a look at a few of these stocks, and there was one that really interested me. It was AMAT. So I'm going to take the custom search, put it off screen, take a quick look at it, and you can see how AMAT has also had that cup and handle formation. I hover over the E and it tells me that earnings will be due on May 21st. That gives us lots of expirations between now and then to take a look at. I'm going to go into stock ER. We'll take a look at that expert rating. Fundamentally, we can see the stock is very, very strong. So there's a notion that the chip demand is going to be pretty high. We're seeing Dell and Hewlett Packard actually perform pretty well because during the lockdown, people have had to upgrade their computers so that they could log into the internet and so that they could communicate. So early indication is that computer sales might actually be okay. Well, with regard to AMAT, we can see that they've got a forward PE of 9.57, which is very low. We can also see that their cash per share is $4.31 and debt per share is about $6. They've got plenty of cash on hand to weather this storm. So AMAT's exactly the type of stock that we'll be looking for. As that demand goes up, AMAT will be one of the first semiconductor companies to benefit from it because they're involved in the very early stages of that process. So we'll click on the chart. We'll take a look at where we might possibly want to own Applied Materials. You can see here that we've got an upward sloping trend line and it comes into play right around $44.80. We will click on that bar and we'll click on that one. We'll draw that trend line. So we need to be below $45. Let's see how far out of the money we can go on this. Get as big a credit as we can. And we can even go out to this May 15th expiration because remember, earnings were on May 21st. So let's see if we can get all the way down to this $38 strike price. That would be ideal. The stock would have to make a new relative low, and that would mean that the market could actually go all the way back down to its low. So if I look here, the 37.50 puts are currently 72 cents bid, offered at 91 cents. So I'm going to click on that bid. Now, you know I've been selling a lot of naked puts, and I would just outright do this naked put right, and I would sell this for 75 cents or better. If I can do that, I'm going to generate a 10% return. Now that's based on the fact that I only have to put up 20% of the strike price, which would be $7.50, and I'm bringing in 75 cents. 75 cents divided by $7.50 is a 10% return. Some option traders might scoff at that and go, what the heck is a 10% return? I'm trading options. I want to make 100%. Listen, anytime with this type of market uncertainty with interest rates at 0%, if you can generate a 10% return with a very high degree of probability, then you want to take that trade. 10% is 120% a year. So I think most investors would be very happy doing a trade like this. So you can sell that naked put and you can get 75 cents for it. If you're going to do a bullish put spread, you would probably have to buy something farther out of the money like the $30 put or maybe the $32.50, but you can see how out of whack these option premiums are. So as a general rule of thumb, when I do these types of spreads, I like to sell a put and I like to buy the farther output and I like to be able to generate a 25% return. With the bid ask spreads being so wide, you just got to put your price out there. So in this particular instance, 2.5 points between the strike prices, I need to bring in a 50-cent credit. So if I click on the bid and I click on the ask, you can see that it's 37 cents bid offered at 53 cents. Your chance of getting that credit done for 50 cents, pretty slim. You're going to need to have a pullback in the market, but S&P futures look like they're going to be down about 20 points on the open. And you could see on Friday, AMAT had a little bit of weakness. So the stock already was pulling back on a day when the market was trading higher. So we may get a little bit of a pullback. And if we do, then we want to try and sell that 37.50 put and we want to buy the $35 put and we want to do that for a 50-cent credit. Now I'm going to go in and I'm going to set this up as a staged order so that members can easily get into this trade. So I'm going to click on the bid there, click on the ask there. That sets up my spread. I'm going to do one contract. I'm going to ratchet this up to a 50-cent credit and I'm going to click GTC and then I'm going to stage that order. If you are an option stalker subscriber, you can simply go into the staged orders. You'll see that AMAT trade right here, April 12th. It's ready to go. All you have to do is click submit and it'll be routed to your broker. Then you can adjust the quantity and then you're set. It's that easy. I like AMAT. I think it's going to perform well. I think that all stocks are going to have a little bit of a rocky road for the next quarter or so, but I think AMAT could do well with the computer sales that we're starting to see. Also at a PE ratio of 9, also with a lot of cash on its books, really strong balance sheet. I think this is the type of stock that you'd want to use for bullish put spreads. So easy to find using the custom search engine. Only had to put a few variables in. My favorite variables, I want to see a bullish trade signal with the one option system across multiple time frames. I want to see relative strength on the SPY across multiple time frames. Other search criteria you can use. Heavy volume's always nice to have as well. Then just make sure that you're sorting and you're watching for stocks where you can sell that bullish put spread before the earnings announcement. So we don't want any of these trades to span earnings. That's your trade for today. If you like the content, please give it a thumbs up. Make sure to subscribe to this YouTube channel and turn on your notifications. You never know when I'm going to post these videos. I promise I'll always have a trade in the video, so it'll be very worthwhile for you. Thank you. Happy Easter. We'll see you tomorrow morning.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.